Understanding smart money concepts is powerful, but if you can't enter with precision, none of it matters. In this class, I'll give you the 3 smart money entry models institutions use to enter with sniper accuracy. Welcome back to Smart Sense. This is Class 5 of our Smart Money Masterclass, and today, we're turning theory into execution. You now understand market structure, liquidity manipulation, order blocks, break of structure, change of character. Now let's answer the big question. Where do smart money traders actually enter? The smart money entry formula: institutional traders wait for 3 things: a key zone, usually an order block or imbalance; a liquidity event, stop hunt or sweep into that zone; a confirmation structure, change in lower timeframe market structure. Let's turn that into actionable entry models you can use right now. Entry Model 1. Liquidity sweep, change of character. Entry. This model is built on trap logic. Price pushes into a liquidity pool, equal highs or lows. Stop hunts breakout traders or stop-loss clusters, then it forms a change of character on a lower time frame. Once you see that shift, you enter at the retest or OB refinement zone. Don't enter on the sweep. Wait for structure to flip. This model is low risk, high RR if you're patient. Entry, Model 2. Order, block, rejection, break of structure. Entry, here's the setup. Price returns to your marked order block. It forms a rejection wick or doji. Liquidity absorbed. Then, price makes a break of structure on lower time frame confirming continuation. Your entry, on the BOS candle close or next retest to the OB. This keeps you aligned with institutional continuation entries. Great for trend trades. Entry, Model 3. Imbalance, fill, plus. Aggressive continuation. This is the volume-based model. Price fills an imbalance area aggressively, forms a clean structure, HL, HH, or LH, LL. BOS confirms intent entry comes on the breaker retest, not the candle ideal for momentum environments, London and NY open, where smart money balances price fast. Confirmation checklist before any entry. Always run through this checklist. Is this near a valid smart money zone? Has liquidity been taken out? Sweep? Fake out? Has internal structure shifted? Change of character? Has external structure been confirmed? Break of structure? Is there imbalance nearby or inefficiency? If 3 or more line up, you're holding a sniper rifle, not a shotgun. Common mistakes to avoid: entering on the sweep without confirmation, ignoring structure, trading based on emotion, chasing after BOS before liquidity has been taken, losing patience. Smart money waits for setup. Retail traders force one. You now know the difference. Recap: 3 entry models: liquidity plus change of character order, block plus break of structure, imbalance plus structure return. Smart money confirms, never guesses. Your job is not to predict. It's to react to structure at key zones. Execution is where the money is made. This is the turning point in your development. If this class gave you clarity on how smart money enters trades, you reach closer than ever to consistent, bank-level execution. Like, subscribe, and don't miss Class 6, our final lesson, where I'll walk you through a full smart money trade breakdown, step by step on a real chart. We're talking top-down analysis, zone marking, and live execution psychology. You don't want to miss it.